How's it going? This is Jonathan, and in this video, we're going to be talking about Bitcoin, the current crash. I wasn't going to touch on the Melbourne protesters, but seriously, get out of the city.
He's work off! We pay your fucking taxes!
I've had two questions raised recently, such as the first one, can you teach me how these time counts are calculated? And the second one, which was, are we heading lower than the current September low? Now, I understand your frustrations, I understand your concerns. We did get a beautiful low straight into the 20-second near price count that I did put out eventually on Facebook as we got more confirmation of which direction we were heading. So if you're not in these Facebook groups, you're not following me, that's where you need to be, because unfortunately, it is a lot easier to make text-based write-ups than it is to create these videos. These videos can take at least 2 to 3 hours or even longer from doing the transcriptions before I can get them out to you, whereas I can do a write-up in like 20 minutes. So try and find me in these groups, and that is where I'll be. And I'll try and provide you the information as I see it occurring. Now, for those of you who don't read the description, I've already put out the 2022 Bitcoin forecast. Now, I was originally going to provide this information free of charge. I thought it was quite important to put out, though I have been consulted by a large number of people out there that this information shouldn't be given away for free. And that was pretty much due to the detail and the depth of information that I go to in these reports. So what I've done is I've included it free of charge inside our forecasting service. Now, forecasting service is a yearly subscription, and that is where we detail the gold market, the Dow Jones, the Aussie market, and also now cryptocurrencies. And we forecast their market movements in and around the year. And we also produce yearly forecasts 1 year or more in advance. And we show you how to use these techniques, what to look for, and exactly what I'm seeing as we go out through the year. Now, if you go and buy this yearly forecast outside of that forecasting service, there is going to be a price tag of $1,000. Now, that was what is recommended for this. Now, I don't think that's very expensive, given the fact that you may be able to talk to your accountant about having it as a tax deduction. And second of all, if you're trying to go into the crypto market and make 10, 20, 30, 50, $100,000, what is $500 to $1,000 to you? And why are you whinging over such a little amount? That's a mindset shift that I need you to get over. Some of these books that I have in my library right beside me costs hundreds of dollars, some of them $1,000. Now, if you aren't going to go out and pay for education, you really need to switch that if you're really trying to make a lot of money in these markets. So if you want it, it's in the link below. It is heavily discounted because it's coming free of charge inside our yearly forecasting service, which covers a range of markets. I've included the 2022 forecast in there already. So you're going to be able to see what the year ahead is going to look like at least 3 months in advance so that you can start planning for it right now. And I think that's critical. So with that said, let's get to the charts and we'll take a quick squiz. So by now, I'm pretty sure you're well versed on what we do here. On the chart that you're seeing, which is a trading view chart, this is the Bitcoin USD chart. Now, all the arrows that are put on the chart, these arrows are actually highs and lows that we've been forecasting in advance, and we've been watching them play out. Now, we give these forecasts at least 1 or 2 days to play out. That way we can see what's actually happening in the market. But the last forecast that we put out was for the 22nd of September, and we stretched it between the 21st and the 23rd just to be safe. So a lot of the time counts that we're putting out were aligning around the 22nd. Some pushed the 23rd, but I did get one that came in on the 21st. Now it really depends on what data set you're looking at, because some data suggests that the low actually occurred on the 22nd, where other data is suggesting that it occurred on the 21st. So just keep that in mind now. But as you can see, all these highs and lows are ones that we both post publicly, whether it's in written form or publicly in the videos, and we are watching them play out. So the last one that you saw, which I'll go ahead and switch over now to Optima. I've just pulled up the chart, the 22nd of September. Now there's a very important reason as to why I move the dates, and it really depends on where we're getting these clusters. Now a cluster can occur when we get 2 or more time counts expiring at a certain time. Now I've showed you the next one, that's around the 25th of September. I'll go ahead and blur out the rest of the month and the prior month's dates. So anyway, as you can see, it's quite important to watch these turn dates, because in and around them, the markets do shift. Now the other turn date that we were obviously talking about was that one that occurred. Let me go ahead and get my pencil, squeeze it on here. It was between the 17th to the 19th. We did get the turn date occur on the 18th, which marked another top, which definitely sent us down lower. Now, a lot of the ideas that I had, and we'll go into the price action very soon, a lot of the ideas that I put out were centered around the mass pressure chart. So we'll get to the mass pressure chart in a second. Let's go ahead and start right back at the start. We'll shoot through every single page on this workbook, and then we'll go from there. So we already know what's happened. We had the golden cross come up, and then the markets reversed soon after. It did the exact same thing that happened when the death cross occurred, where the market didn't really do anything and then it scooted higher. So these sort of indicators, they're not ones that should be followed blindly, and they're ones that should be taken with a grain of salt. They only tell you what has happened and not going to tell you what will happen. So they're lagging indicators, and I'd prefer to sit in the bandwagon of forecasting. That is my forte, okay, forecasting, looking at where prices can go, when they can change price, when the dates would actually occur that the market would change direction. That's where I like to sit, that's where I like to put my expertise in, and try to reject a lot of these simple indicators, I think is a good word, because they're not fortune telling indicators, okay? They don't tell you what can happen, it only tells you what's happened, okay? So with the weekly chart, a lot of people, actually this is a point I wanted to make, a lot of people said that based on the weekly swing right here, based on the weekly chart right here, they said that the market is actually looking bearish. Okay, so there's one thing I want to point out. This move from the bottom to the top was one single move, okay? It wasn't multiple moves, it was one single move from red to blue. That's one single move. Another thing we have to point out is that from blue to blue, right here in this current setup, it's one single move. Now that's different when we look at green to red to blue to red to green to red to green to red. Those are multiple moves, but these two current moves here are currently just 2 moves, okay? So there is no bearish case. Even if Bitcoin cracked below here, based on simple bar chart rules, there is no bearish case right here. Now in saying that, when I show you the Kagi chart and also the Gann swing chart, we'll have a different picture, but those are a different set of rules. But based on the weekly chart, as it is like this, there is no bearish case at the moment, okay? So with the monthly chart, we are finally getting our open and close to be a bit more negative for the month. That is something that I was questioning last week when I put the video out to you. I was saying that they're a bit too close to call a negative month just yet. We needed to wait. So I'll go back to the swings. Now, this is the market top that we all remember. That was around the 18th. The market then fell lower and it's now posted a swing higher. It's currently posted a swing higher in the daily chart because the daily chart from the 21st up to the 23rd is currently moving higher. So that is why this swing is currently moving higher. On the Gann swing weekly chart, we do currently have it posted lower. Now it won't post higher until it closes high enough, and one point we need to look out for is the midpoint of this range here. Okay, so that midpoint there is going to be important and we should start to watch that. Now I won't go into midpoints now, though consider it a term introduction, and in the future when I bring that term up, just listen for it, because then I'll start to talk about what the midpoint is and why it's important. Okay, now with the Kagi chart, we have moved down again on the weekly 3% points drop. So we got a drop here that exceeded 3%, and that's why the Kagi chart has now moved down. It's also moved below the last low, which makes it turn red. Technically speaking, this would be bearish, but we can see the Kagi chart swing higher, and that's something we should be looking for. If our case is for higher prices to run, that's what we'll be looking for. If our case is for lower prices to come, then obviously having red, and if we were short in the market, would be beneficial to us. Regarding the daily swings, as we can see, we're still moving down. We do have a higher swing at the moment here, though this higher swing based on its current top won't turn green until we breach up here. But we can post another swing like this, which would, when it breaches it, turn it green, and that would be considered bullish. But got to remember that this chart up here is the daily chart, so we're taking into consideration daily price action. Now I don't trade daily price action unless I'm doing the time analysis stuff, so the more emphasis should be put on the weekly chart over here. Okay, now with respect to price, what I want to do right now is I want to switch over to the Facebook group, because I did put out a few forecasts for price and I didn't publish them in the video last week, I believe it was, and that was pretty much because I didn't have any clear picture just yet on which way the market would go in respect to how low it would drop. All right, so if you haven't already started following me in the Crypto Australia Facebook group, go ahead and take a look at some of the posts I've been putting there. I think they're quite informative. Now, this was posted on the 21st of September at 10:40 a.m. Now in that I said that a turn date is scheduled for the 22nd of September, though I'm watching between 21st and 23rd for a low. Now at the exact same time that I was putting this out, a lot of other people started to put out forecasts for $20,000. What's important is that you don't turn bearish on a time count. Those are the worst times to turn bearish, because as negative energy pours straight into a time count, or what we call seasonal counts or emotional dates, I won't go into all the terminologies behind these counts at the moment. Negative energy will turn into what we call an extreme, and when those extremes occur in these time counts, you can almost guarantee, almost, not always, but almost guarantee that the market will change direction. So it's important that you never make rash decisions on these turn dates and always trade with logic. So an area that I'm watching right now is around 38,500 mark. Now I believe it was around 39 to maybe 38,000, and the midpoint was around 38,500. It coincided with a 220 degree angle, 61% retracement level, and also 100% extension level from on the way down. So if you're familiar with that sort of work, go ahead and put that on your chart, because it is good lesson and a good way to practice these skills. And also the other area I was watching is between 40,330, which was the 45 degree angle, which I'm hopefully sure you're well aware of now. And also the 50% retracement from top to bottom of that current move was around 41,000. So let's swing back over, and we're looking for around the 41,000 mark and also around the 38,000 mark for where Bitcoin fell to. So Bitcoin's 41,000 mark was around here. Let's go up. Was around here, and the 39,000 mark, or 38,500, would have taken us down to around here. So Bitcoin did fall between that price area before it reversed on those dates. Now, I don't look for accuracy. We look for percentage of a forecasted price point. So when you do any price projection and you're trying to forecast, Fibonacci extension, or even one of the retracements or any other price extension method, you want to give it at least 1 to 2% leeway of that price projection to account for overextensions or underextensions of those price forecasts. Okay. Now, obviously, it's beautiful when you get the exact dot confirmation, though if you're looking for the exact dot all time, you'll miss very significant turning points. So that definitely was an area that we were watching as the market fell, and all we need to do is get a price confirmation that the market is starting to come down and then stall. So by stall, it's where the market comes down and then starts to move higher. So it's stalling, the decline is stalling. And then once we get the time reversal and we see the market advance, that's when you know that it's a safer option to place your buy order. Now, of course, I don't give you any buy and sell signals or anything like that. I don't tell you when to buy, I don't tell you when to sell. I just show you how to use all these skills so that you can go out to the markets and use them yourself. That's simply all it is. Now, with respect to pattern, still saying important here, no trend lines, because we are looking at the daily chart. So there's nothing that I can really draw that's going to be significant at this time. You can look at other people's analysis. They put all sorts of both and bad, how you in market, but you can take a look what they got to show you. Now, with respect to Elliott wave now, as we can see, we do have this swing lower. Now, you may recall last time we spoke, I did suggest, I should say, that the market could come up and then fall lower. Now, I did make the comment that I didn't know if the market was going to decline further, though it could pitch a higher low. That was something that I did say. And that's because at the time, we didn't have enough data to suggest if the market was going to rise or fall. So we need to always, and I only post like once a week, maybe twice a week max. So I can't be out here and just update you every single day on the market movements like all these other guys do, whether it's Jason Pizzino or whatever his name is, and these other market wizards. When you post every day, you can capture these moves and you can capture them just like that. I try to put out a forecast that I believe could be the best probability for the week ahead, because I'm only coming out to you once a week, okay? So I got to think further ahead, and then I got to assess the market as it comes and as I see it. So we did come down into the 22nd or 21st, depending on which chart you're looking at. I believe that it's a significant low, and to detail the significant low, what we're going to do now is move it to the cycles and then the mass pressure chart. So with respect to the cycle, I did think that this low was an important low, given that we were inside our forecasted cycle low, though it's pretty apparent now that this low is the low that we're going to be counting forward from, which means that if we're going to be using this method of analysis out into the future, I believe now, unless the market declines from here, that now this one is the safer low to be forecasting out from, which would give us a time frame of around November for a left to right translation, and then a potential low in December. So now we're looking out even further now, okay? Now, the low that occurred around here, let me just go ahead. The best low, in my opinion, I think is this August low, which would have given us a left translation top, if that is the case, with another market low in October. Though the market can rally higher and post a right translation top, so we can't rule it off just yet for a higher low in November. So that's just currently where we're sitting. These are the cycles within cycles, the wheels within wheels phenomenon. And all we're trying to do is capture the most likely scenario moving forward. So I'll go ahead and leave these two on there. I'm going to go ahead now and delete some of the older ones, so they'll no longer be visible on our chart. And this one here is still yet to play out. I'm going to... Okay, so now let's go on to the other question. The question that I had was, is Bitcoin likely to fall lower from here, given the fact that the forecast suggested, or the mass pressure chart suggested, that the low that we've had now is extremely lower than the low that was in the forecast. Now, go back a couple of charts, because when we do these, or when I produce these mass pressure charts, they're an amalgamation of different cycles, okay? So what that means is we've taken in different price points and we've produced a curve. Now, the key word is curve, because it doesn't signal price, it just signals curve. So when we're looking at these lower tops and lower bottoms, we are looking for the market to pitch lower tops and lower bottoms, okay? So when the market is down here and then it's higher here, that's a higher low. When the market is up here and then it comes down here, you can definitely see there's a gap here. That's a lower low. So it doesn't really tell us the magnitude. As you can see, we have this really large drop here, and then we have this rally, and then we have a smaller drop, and over here we have the smaller drop, we have a rally, then we have our larger drop. It gives us a clue on direction, but it doesn't give us a clue on price. You've got to use a different form of analysis for price, okay? And then when we have this slow grind lower here, but then we actually have sort of this just continuing lower price from a daily close perspective. You've got to remember that all these price points here are based on closing prices. And yes, we already know that technically the market came down to around these levels multiple times. The point is that we can't take into consideration price, because that's a different form of analysis, okay? So we look for clues in this instance where we have this action here, and this action here. So those are our clues, and then we have these actions here. So now if this market is going to be of any guidance moving forward, we should be expecting something like this. Obviously my dates are not aligned, but that is sort of the direction that I'd be looking for, okay? So the next few dates that we've already been published, I think I showed you the next one was the 25th. So if the market is going to push higher, it would be good to get a low on the 25th and then a rally maybe into the 28th to the early month next month before it pushes lower, and then we move up potentially into the 25th to 28th of the following month, down into the end of the month, and then up from there. I'll get more clarity on the exact time counts that I'm looking at as I go through the charts, just individually. I haven't done that yet. I wanted to see this move play out, but that's kind of what I'm looking at now. Now, as you know, I am the only person to be producing this chart and to be guiding you through it for the whole year. If you want to see what 2022 is going to be like, I've already produced a whole report. It's about 16 pages long, and it details, so it's not a book, it's a report. It details the year in advance. It details all the time counts I'm looking at, details the angles and what you should be looking for, and when you may want to consider de-risking or adding risk to your portfolio. So that's in the description below, so you can go ahead and just look at it right now. It's available and it's online and it's ready to go. Now, I'm going to be showing you right now what everyone else has been showing you, and that's the end of year rally. So I'm going to zoom forward now because we've already signaled that there's going to be rally out to the end of the year, and I've already put out some guidelines on what I'm actually looking for. Okay, so I'm just going to, because we're getting more data up, I'm just going to squeeze these up now to get a bit more fluid. So the next point, which is why I keep saying that there's potentials for lows in October, lows in December, and also November, is because we have our mass pressure chart indicating that the market is likely to decline into this period, okay? So these are the stalls that if you're going to be dollar cost averaging, you want to be dollar cost averaging on. That's if that buy the dip is your method. Also, you might have some other stalls along the way, obviously, but I wouldn't be going into the end of December and loading up like a bunch of new people are. That's totally your call though, but I just don't recommend it. So let's finish off with seasonality, because we already know that based on seasonality. Actually, we'll finish off in the Astro tab. September's likely to be a negative month. Then we get strong performance in October. Obviously, I'm expecting a potential decline in October, so we'll keep that in mind. And then November's going to be a very strong month, and then December is also going to be a relatively strong month, and it has also historically indicated top of the markets at the end of each bull cycle. So we'll see what plays out there, but those are things that we need to be looking at now, because we've only got about 3 months left, and every single new person that jumps in now is going to get wiped out unless they see this video. They're going to get absolutely wiped out. I don't think there's a very high probability that the market is going to advance very far into 2022. But there are some key points that we should be looking for 2022 for when we might want to de-risk, allocate extra assets to this market. So I just wanted to finish off with this here. We have the 45-degree angle, which met with resistance to the downside on the market. The market came up, tried to touch the 220-degree angle, didn't quite get there. It would be good to see it keep above the 45-degree angle. Worst case, it could come down and touch this next 220-degree angle, though I think, based on my personal opinion, the worst now may be behind us. I don't subscribe to the method that Bitcoin is going to go to 20,000. That's definitely a long way away. There's definitely people out there saying it's $20,000 and then we're going to the moon. I'm not going to say it's not going to happen, because that would be ignorant of me to suggest that. Though I think based on probability alone, there is a very, 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 very low chance that a move like that is possible, right? So there we have it. So there you have it. If you learned anything, if you want to keep in touch, go ahead and subscribe to this channel. If you want to share this with your friends on Facebook, feel free to share it with your friends. I'm not going to prevent you from doing that. I think this information should be shared. I think that I'm sharing information that is not likely to be shared by other YouTubers, mainly because of a knowledge gap. Though, in saying that, if you do want to see what the year ahead is going to look like, in the link below, I've published the report and you can get access to it right now. So if you want to get access to it right now, go ahead and click that link and I'll see you on the inside.